Joining us now is Vlad Tenev, CEO and co-founder of Robinhood. Vlad, great to see you here in person.
Thanks for having me.
Yeah, and after this big event you guys had, so I know you're resting your voice. You're taking a little bit of a recovery. So.
There was a lot of talking. Yeah, it was fun though. A lot of selfies with customers. You know, I think it was good energy at our Gold event last night.
And a lot of different product announcements. So you guys are really getting into financial services in a new way, in a totally different way. So you've got wealth management, robo-advisor, private banking, and this AI feature. I want to get to all of that. But in terms of getting into this arena, what gives you confidence that you can differentiate from what's already out there?
Yeah, I mean, we try not to launch a product unless we feel like there's at least one major way in which we can differentiate on pricing and also on user experience. And I think across all three of those products, they're actually highly differentiated. With Robinhood Strategies, which is our investment advisor offering, that breaks the traditional advisory model. We actually have built an advisory solution that gets better for you as your account with us grows with what we call the capped fee model. So you'll never pay more than $250 a year, even if your portfolio gets into the tens of millions.
Well, let's talk about that for a second. The capped fee model, so it's about 25 basis points and then stops at $250 a year if you're a Gold subscriber. Is that the right way to think about it?
That's the right way to think about it. And I think the value proposition is super great if you have millions of dollars. I mean, it's great starting out as well.
Yeah.
And we want to make it very easy to do that. But if you have, 5 million, 10 million or more, and it's being managed by a traditional advisor, the value proposition of switching is tens of thousands of dollars every single year. So that's what got us very excited when we figured out that traditional advisor models leave two sides of the market deeply dissatisfied with the service. The folks starting out who aren't really getting good, high quality personalized advice, but also the people who have been loyal customers of the advisor for decades and whose portfolios have grown, and they're basically paying more and more for the same exact service.
And I think about the robo-advisor market. I mean, there were a lot of these in fintech, sort of the startup versions, whether it was Wealthfront or Betterment or Acorns. And Robinhood grew significantly faster than a lot of those. What kind of urged you to move back into that versus totally self-directed? Can you talk about the decision to move in that direction at a time when starting out Robinhood really didn't want to do the robo-advisor thing?
Yeah, I think stepping back, the long-term strategy for Robinhood is to be the place where you can buy, sell, trade, hold any financial asset, conduct any financial transaction. And so it's really about how can we make Robinhood the place to hold all of your money. And for some of our customers, even the ones that trade actively, they have a portion of their portfolio that they like to be hands-off with. And it's typically even the larger portion of that portfolio. And then you also have a lot of new customers that just want to invest, and they maybe don't have a particular stock or company in mind that they want to invest in. And this product is interesting for them too, because you literally just fill out your questionnaire if you see the demo, and then we give you your asset allocation, and it's sort of hands-off investing. You deposit money, we take care of the rest, and you can trust that we've got experts that are looking at it, that know what they're doing. We're keeping you optimally invested and rebalanced, and your fees are actually declining as your portfolio grows rather than increasing.
And did you find that people wanted both single stocks and things like ETF, more passive investments in one place? Talk about sort of the psychology behind that. It seems like people want to watch the performance of single stocks too. There's a little bit of an association, and I think people check their portfolios more typically if there's actually a stock that they're following. Did that play into it at all, sort of the behavioral psychology?
Well, I think that there's benefits to having it on one platform. I think the main benefit is you don't have to go through a full onboarding process. You don't have to split your money into multiple institutions. If you need your money to be withdrawn from our Robinhood Strategies offering and moved into self-directed or spent, or you need to pay a bill, having it in one platform just makes all of that easier. In terms of the user interface, I think that it's gotten easier and easier for you to have multiple apps on your phone, and so I'm less sort of like prescriptive on whether everything needs to be in one app, and we have multiple apps now that we're offering. But having it be on one platform with a unified onboarding where the money is shared across all of your accounts and can move in between, that's a huge advantage.
How are you thinking about monetizing this? It's significantly cheaper than some of the other wealth managers out there. When will you break even on these products?
Yeah, I think there's two really powerful things. One is that all three of the products that we announced are part of Robinhood Gold, which is our subscription offering. And Robinhood Gold itself grew from about 1.5 million paid subscribers about a year ago to 3.2. And that's a monthly subscription. It's a great deal, $5 a month or $50 for the annual plan, but still generates a significant revenue. It's a 9-figure business for us now. So there's that one element of it. The other is advisory on a standalone basis outside of being part of Robinhood Gold is still going to be a very profitable business for us, even though it's a great deal for customers. And it's because the amount of work that allows us to support these portfolios doesn't scale linearly with assets. Mm-hmm. And so by decoupling the pricing from scaling linearly with assets, we're going to have healthy margins on this business as Robinhood, but the customer is just going to get to keep the majority of the value as their investments increase, which I think is how it should be. I mean, it doesn't make sense to pay 10 times as much for having a $1 million portfolio managed as it does for a $100,000 portfolio. The work is essentially the same in both of those cases.
And what about the incentives? So for other products, you guys had offered matching if you're going to transfer into a retirement fund. What do the incentives look like? Are there new ones with the products that you're offering today?
Yeah, actually, great timing on this. So we're running Gold Month, which runs for another 4 days. And there's 3 things that are part of Gold Month. We have a cool gold bar giveaway where you can get 1,000 gold bars for depositing money. That one's just fun because you can get physical gold. So we like doing that. We have a 2% transfer bonus match. Mm-hmm. So if you move in an account from another brokerage, we'll match the amount 2% instantly. And that's an uncapped transfer. So I think that's the best deal in financial services that I've seen recently. And then we also have a 1% crypto deposit boost. So if you move crypto from an external provider into Robinhood, we'll match that 1% as well. So it's 3 offers that really aim to lower the activation energy for customers bringing more and more of their assets into Robinhood.
And so crypto is not a part of this today. Is the plan to add cryptocurrency into either the robo-advisor or any of these financial services?
Yeah, I mean, there's no sort of ideological reason why it's not part of it. I think that if we get customer demand, we'll obviously prioritize that feature. We wanted to start with something that we can get immediate customer feedback on, and there's literally hundreds of features that we could add to this, and we intend to add over time. So it's going to just keep getting better and better, like all of our other offerings.
And some of the incentives you mentioned earlier, have those paid off in other products, whether it's growing assets under management? Has it been worth it to offer some of the discounts?
Yeah, I mean, most of them have done very well. We track diligently the incrementality and the payback and the return on investment for all of the offers that we do. And then some of them have not worked out, and we've actually pulled them back. So I mean, we're not precious about sticking with everything, regardless of whether it works or not. So we had, for example, a 1% deposit boost on cash deposits for Gold subscribers last year that didn't end up being very incremental. So we pulled that back, and didn't resonate so much with customers, and we now reallocate it into things that are resonating.
Are those customers sticky when people move money into Robinhood? Are you finding that they stay and that they're not waiting for the transfer bonus and then getting out or going back to Schwab?
Yeah, I mean, unincentivized retention in general has been very, very good. So people tend to stick around on the platform. We do have, you can't just put money in and then withdraw it after the bonus the next day. So we have to make sure that folks that are specifically coming for the bonus, we sort of like disincentivize that behavior. But on a general basis, Robinhood's gotten good and complete, and it keeps getting better. So I think retention's actually been improving over time.
And then the subscriber growth too with Gold, you talked about that a little bit, but talk about that as a stable revenue stream. If you're adding subscriptions and that's a little bit more predictable for investors, is that part of the long-term strategy, and what will that look like going forward?
Yeah, I think it was not clear at the beginning whether subscriptions would work well for Robinhood, because there's not a huge history of subscription products working well in financial services in general. Like, they've worked great in e-commerce or retail, but less so in financial services. So I think people were right to be skeptical. There was some skepticism. But my philosophy behind it is subscriptions are about loyalty. So if you're a subscriber to something, then that service is sort of the first in mind when you think about trying something else from that category. For example, if you're an Amazon Prime subscriber, if you need to buy something and you're fine with it being delivered the next day, Amazon, once you're a Prime subscriber, tends to own more of that share, more of that e-commerce flow. Same with Costco. Costco membership kind of becomes a loyalty program. And for financial services, loyalty is equivalent to wallet share. So if we offer a great service and you're already a Robinhood Gold subscriber, Robinhood becomes top of mind for when you're shopping around for other services as well. And so it's the subscription revenue is one aspect of it, but it's also a vehicle where we can, serve more of the customer's wallet.
So is that fair to say? Is that the goal, the Amazon Prime of financial services?
Yeah, I mean, obviously there's differences, but we took inspiration for that from Amazon. We took inspiration from Costco, which is another great offering, and they have a slightly different philosophy because they have some of these products that they offer that just have ludicrous economics, right? Like the $1.50 hot dog, or even the gold bars have done very, very well for Costco. So yeah, we take a lot of inspiration from those guys. We try to learn not just from companies in our space, but who are the people that are doing interesting things throughout all industries, and even throughout history in the recent past.
How do you think about vision creep? Robinhood really started as the self-directed trading platform. You're doing a lot. You're moving into a lot of different areas. How do you make sure that those core products are still keeping investors and are still working really well?
Yeah, I think that's a challenge, right? I think that unlike some other companies that they're doing like institutional, they're doing business to business. A lot of companies on the crypto side are vertically integrated fully. Our strategy is we just want to serve the entirety of a retail customer's financial needs. Mm-hmm. We do see an opportunity to expand that to institutional, to business as time goes on, but I think near term it's sort of this laser focus on serving a retail customer's full wallet, all of their financial needs. And what we see with our customers is, if you ask Steve Quirk what Robinhood product is most helpful to brokerage, he'll probably point to Johan, our crypto GM, because the fact that we have crypto within Robinhood and you can have it side by side next to your brokerage offerings is a huge differentiator. And I'm sure Johan would say the same thing. So the more of these products and verticals we add, the more compelling being a Robinhood customer gets to customers, because they legitimately want everything on one platform. So I think that kind of pushes us to diversify the retail offerings more and more.
And are these sort of the same clients, those that are trading crypto, maybe getting into sports contracts, and maybe taking on more risk? Are these the same folks who are going to get into private banking, want estate planning, and some of the things that might come with wealth management and a robo-advisor?
Yeah, I mean, I think that we have the active traders who tend to be a relatively small portion of the overall customer base, because not everyone wants to actively trade, but they also tend to be the ones that adopt all of the products. So yes, I would not be shocked if it's the active traders who actually adopt the passive, Robinhood Strategies advisory product in the greatest numbers, just because they're the most active in general. So they adopt the more active and the more passive features first. But I think these are mass market products, and all of our 25 million customers could benefit from better banking and better investment management.
That's super interesting. Yeah, the psychology behind if you're an active trader, you might still need private banking or wealth management. So
everyone needs banking. You actually have to have a banking relationship to even open a Robinhood account.
And you guys, so not a bank charter, not necessarily a bank. Is that something you would try to go after and maybe improve the economics eventually?
It depends. I mean, we pursued a bank charter in 2019, if you remember. So we had an application on file with the OCC for a national bank charter, and we're going the partnership route. We have a great partnership with Coastal Community Bank. We work with lots of banks for our cash sweep offering on the brokerage side, and that's been working really, really well for us. So at this point, no intent to reopen the charter box, but we know how to do it. I mean, we've gone down the road pretty far, actually, and so it's just cost-benefit analysis, really. And I think at this point, the costs outweigh the benefits.
We mentioned the more active trader at this point. There's been so much volatility in the markets around tariffs. Give us a sense of how individual investors are reacting to some of the volatility. What are you seeing on the platform, and how are they behaving? Yeah,
we're seeing a lot of buying the dip in general. They tend to be our retail investors, if you kind of look at it on aggregate, tend to be heavy into innovation and frontier technologies. So they're investing a lot in AI, they're investing in cryptocurrencies, they're investing in electric vehicles. So when we see big dislocations in the market, generally they've tended to view those as buying opportunities. Now, that doesn't mean it's always going to be that way. If that continues and we have prolonged volatility or we enter a recession, markets could change. But thus far, I think they've been keen to buy stocks at a discount.
Interesting. A lot of the innovation names, I mean, I would think that there's a lot of NVIDIA interest. They've gotten pretty beat up recently, and Tesla. You're not seeing any sort of retreat from that buying activity?
We haven't seen retreat in a significant way. And I mean, we publish all of this in Robinhood Investors Index on a regular basis. So yeah, people are still very interested in those names.
And what about AI? So you also have an AI offering. Describe how that's going to work, and how much of a role should AI be playing in somebody's investment portfolio?
Yeah, I mean, we wanted to start with the areas where customers have questions that AI and its current capabilities can answer very, very reliably. Because in financial services, the tolerance for hallucinations and not being able to interpret the results is quite low. So we have to make sure the results are interpretable and also hallucination free. And when we look at, we also wanted to tackle hard use cases. We didn't want to just put a chat box in the app and say, oh, well, now you have access to AI and you can ask it any question you want. I think the two biggest pain points that customers have is when they see something happening in the market with a particular stock, they want to know what's going on. And so the stock digests powered by Cortex provide that solution. And then for options trading, options are very, very complicated. The translation process from having a viewpoint about a stock and like a particular multi-leg contract trade is hard to grasp. So what Cortex does via Trade Builder is you figure out what your point of view of the stock is, and then we can actually suggest multiple strategies that execute on that point of view, including multi-leg spreads. And then we kind of break it down with the information for why this strategy, what the spread is going to do, and allow the customer to really easily transact from that.
So it's more of a research assistant. Is that a fair way to put it, versus automating this and saying, AI, make all of my investment decisions?
Yeah, so the idea would be exactly, this is sort of, you're in charge, this is a self-directed product, but AI is helping distill the information and synthesize synthesize it for you, and make it actionable. Synthesize it right alongside where you can actually make the transaction. And I think we should expect for it to expand over time, cover more products and services. So this is just, we thought these use cases are high value, but also difficult. So, once we've tackled options trading, tackling other things becomes much simpler.
What is under the hood? No pun intended, but
Sorry.
the models underlying that. Are you using ChatGPT or Anthropic to power any of this?
We use a selection of different models on the back end, depending on what is appropriate for each use case. And then we also have our own technology on top, because in their kind of stock form, the models do hallucinate. So we have to figure out how to make sure the market data that's being fed in is reliable and it actually goes through the model into output in a reliable way. So we've had to build a lot of technology and infrastructure on top of the frontier model layers.
How do you make sure that that doesn't happen, that there isn't a hallucination or somebody doesn't get inaccurate information? I would think you guys are on the hook if that does happen.
Yeah, no, it's a big thing that needs to be de-risked, right? And that's actually the lion's share of what's difficult about this, making sure that all the data that goes in is reliable. And that's what the team is spending a lot of time just continually working on, particularly as we add more sources and more news, making sure that, if we do get things that conflict, how do we kind of disambiguate them?
And
yeah, it's a challenging engineering problem.
I would think so. And so where is this all going to? If you sort of zoom out and maybe look forward a year or two, is that something investors want? Do they want to offload some of these decisions to AI? And what would that do to the overall market? I would think some of the investment behavior would probably look the same if AI is recommending the same stocks for everybody.
Yeah, I mean, AI actually recommending stocks, I think that's new ground, like getting into the idea generation process. And I think we'd like to explore that too. I think that, it's interesting. There's a lot of regulatory work needed to be done there. These offerings require you at this point to have an idea of which stock you wanted to transact in, and then we give you more information. But of course, some customers might say, let's look at all of the stocks out there and tell me what's interesting, or all of the cryptos, where perhaps it's an even bigger problem. You have hundreds of thousands of tokens created every single week. So without AI, you can't actually even make sense of what's going on. So I think it's going to be incredibly important in all aspects of the flow. And you'll have some customers that want ultimate control. So AI will be an assistant to them, but they'll be in charge. And then you'll have some that actually prefer to be a little bit more hands-off. And in the future, I do think we'd like to have Cortex permeate everything and have knowledge of everything that you do on the platform, whether it's your options trading, the stock digests, but also customer support interactions, and which is already powered by AI in large part on Robinhood. And even Robinhood strategies, when we figure out a clean way that makes sense to customers, Cortex should be aware of what's happening in Robinhood strategies as well.
Could this cause some sort of flash crash like we saw when quant trading really picked up? Is that something you've thought about, just what AI would mean for broader markets if even hedge funds start using the same strategy based on AI, or kind of have access to the same tools?
Yeah, hedge funds and the really sophisticated algorithmic trading firms have been using AI for a long time. Mm-hmm. In fact, if you look at the high frequency trading firms, they were some of the first customers. That was one of the first markets that actually took the GPUs, NVIDIA's GPUs and NVIDIA CUDA technology outside of gaming, because they had to do fast options pricing, right? So I think the financial services industry and algorithmic trading in particular actually contributed to making a market for GPUs outside of gaming that gave rise to all these AI chips and new AI technologies. So that's been happening for a long time. That was sort of like one of the first playgrounds where AI models actually started taking hold.
I wonder if that adds more volatility or makes it harder for retail investors to compete on an individual level? If there's so much more technology out there, especially for hedge funds and professionals, I just wonder about kind of the playing field and what it looks like if you're trying to beat the market, but then you're trying to beat hedge funds that are using these tools in a much more sophisticated way.
Yeah, I mean, our philosophy is to give people the ability to compete, to give them the tools that they need. And I think, some customers, I do think this is a skill. It's less like reading a book and more like playing a musical instrument. We do see that as time goes on, people improve in their trading. It is something that you can improve in. And I think the whole purpose of Robinhood is connect you to any market, any financial asset, and give you all the tools that you need to be successful.
And then finally, investors kind of valuing Robinhood and thinking about what the company is. How should investors think about it? Are you more of a bank and a wealth manager? Are you a tech company? How would you sort of describe that vision to Wall Street of what Robinhood is and will be in the future?
I think we obviously use technology, and I think really to some degree, Robinhood is one of the first technology companies that's really made a dent in the financial services industry. And I think you can see that with the product velocity. So being a technology company allows us to iterate much quickly and offer new products and services to customers. But if you look at our revenues, where we generate revenue, aside from subscription, which is maybe not typical of financial services companies, our revenue over time will scale with the assets under custody on the platform, which as of the latest quarter was somewhere around 200 billion. So that's still quite small in the grand scheme of things. We have billions of annual revenue, hundreds of billions of assets under custody, but there's 124 trillion changing hands from older generations to younger over the next few decades. So even if we capture just a small portion of that, and we get into the trillions or tens of trillions, the business is going to grow in revenue tremendously. I mean, we have the potential to do that as we get more and more of these asset flows onto the platform.
That's a great point, the wealth transfer. A final is sports contracts. How has that gone so far since you've relaunched?
It's gone very well. Customers are really excited about that offering. And yeah, for me, I've been passionate about prediction markets for a long time. I think there's a societal benefit aside from, individual traders trading. I think it becomes a really great source of information. So if you have, a transparent market where buyers and sellers are meeting, that enables better price discovery. If you have better price discovery, you have better predictions. So I think you'll see them for everything. And with this launch last week of the sports prediction markets, this was actually us developing the capability to launch more than one of these at a time. So with the election, we just had one contract. With the Super Bowl, that was, albeit brief, we had one. Now we have hundreds. And so the gap between what we have now and offering comprehensive prediction markets for everything is continuing to decrease. So the team's been doing a really nice job with that, and it's the experience is very, very excellent.
And you got March Madness kicking off, or we're in the middle of it, so.
We're in the middle of it.
Yeah. I would think that's probably a big boost for you guys. Well, Vlad, thank you so much for your time. We got through a lot, but appreciate your time, and we'll revisit a lot of this. It's fascinating, so keep us posted.
Yeah, thanks for having me. Always a pleasure.